Yo, what's up, guys? It's Kevin from Tailored Trades. Today, we'll briefly be going over how I draw and trade levels. Before I get into this, I just want to make clear none of this is financial advice. Everything in this videos are my personal opinions, thoughts, and personal strategies I've implemented into trading over the years. Nothing I say should be taken as professional advice. If you do seek professional financial advice, please consult your personal or a personal consultant. But anyway, so I've been asked a lot how to trade levels, right? Because I see some people do it right, I see some people do it wrong. Before we even get into how to trade levels, you got to know how to plot levels, right? So the first thing is you need to figure out what you're using levels for, because the reason why that's important is those levels need to be created on certain time frames. So for example, if you're looking to scalp, then the 1 hour, 30 minute, and 50 minute levels, those will help you out, right? At least that's what helped me out if I wanted to scalp. Versus if I wanted to take day trades or swings, I would personally look at the weekly and daily and 4 hour time frames, right? So the first key thing is to figure out what you're trying to trade for. If you're trying to scalp, then obviously smaller time frames would be a little bit better because you want to get those small movements. I personally don't like scalping. I think the risk is a lot higher for such a little payout or reward. So we're just gonna go over how I use it for swings and day trading. Okay, so the first thing is I look at the weekly time frame first for any stock. So we'll be going over. I think I'll do Tesla in video today, just so I could show you how it looks on two different stocks. So the first one is Tesla. You guys already know I love trading Tesla, so this will give you guys a little insight on how I draw my levels. But so I start off with the weekly, and one question I also get a lot when it comes to levels or even trend lines is, do I plot with wicks or bodies? And the thing is, it's not like it's not a side. It's not like you're picking a side to trade. No, you plot whatever makes sense. It doesn't matter if you do the wick. It doesn't matter if the trend line hits wicks and then some bodies. No, it just matters to get what's there, and what makes a trend line more possible to be respected, other else than the time frame, is how many times it got touched in the past. Okay, so it'll make all sense if you don't know what I'm talking about in a little bit. But all right, so I'm on the weekly chart. What am I looking for? What I'm looking for is areas where the price had either a major rejection, a bounce, reversal, basically a reversal, right? So let me head over to the not trend line, but the horizontal line, and I'll lock into drawing mode. And the first thing I want to look for is, okay, where did the price reverse? So the first place is right here, right? For Tesla 254.49. Then it's up here, and you can see it's also over here. And when I make these levels, I'm also looking to the left of it, right? I'm looking at history, looking at price history. You could see for this example, this level here at 254.49, not only did it reject at this price, but you could see it got respected multiple times in the prior weeks, even heading back all the way to 2022 and 2021. You can see this is an area where it's been respected, right? Same thing with this level up at 274.39. You can see multiple times it's either touched, closed above, or something like that. Same thing for 286. You guys get the gist, right? One thing I want to make clear is, obviously, since we're on the weekly time frame, these levels look very close to each other depending on how you're looking at it. But whenever you have two levels close to each other, usually what that indicates in my experience is that that's basically a zone, right? So for example, let's say I want to plot this level over here and I want to plot this over here, right? These two levels between 286 and 299.29 is basically a zone. This more applies to like smaller time frames such as the 4 hour, 2 hour. Because on a weekly chart, you're looking at a huge zone if that's the case. But I just want to make that clear so you guys know that. But yeah, so we plot those levels, and then there's a few more you could see. There's this level right over here. The reason I want to zoom into this reason I plotted this level instead of this wick or that wick is because you could see this level was touched a lot more in the past, so that's something I want to go with. And let's see, we'll plot this level right over here, and we'll plot this level, and that's pretty much it, right? We're not just gonna, I guess you could also make this level right over here since we technically bounced off of this the past 2 weeks, but we don't want to go so ham on the weekly because there's obviously other time frames we can look at. So this is the weekly time frame. I looked over that. Okay, now what do I do next? I personally go to a daily time frame. Now I see here if there's any bounces, reversals that I missed out on the weekly time frame, because you won't see anything since obviously each candle closes once the week is over. So we could already spot out a few levels that I've missed. First one is over here, right? Because you could see I had a good reversal off of this. Next place would be over here, right? Because you could see we bounced over here, bounced over here, bounced over here. And then the next place would be right over here, right? Because this was an area where we consolidated. We kept on bouncing off of this, and you can see eventually we bounced off this and made a new high after that, right? I know it looks crowded, but don't worry. I'll show you guys when you zoom into 5 minute to 15 minute, it's very spaced out. And you can see another levels over here because you could see we bounced off of it and we also rejected off of it. And now we could draw this level over here, but from here you could obviously go into the 4 hour, pick up some levels you missed out. It's not always important to do that. You can if you want. So obviously everything's up to personal preference. Didn't want to make another note. Sorry if I sound sick. I am sick, so yeah. All right, so Tessa, there you go. I drew my weekly, daily levels. Okay, now if I zoom into the 5 minute, you see even though I plot out so many levels, these things are very spread out. Okay, so this is where personal preference comes in. Obviously, since these levels are more spread out, this means you would look at like bigger moves. So if you wanted to catch more intraday moves and more like let's say like you wanted to catch this rally, you would look at the 1 hour, 2 hour, 4 hours, and these time frames to try to find those levels which you might find important to trade and so on. Another point I want to make is whenever I post my charts on Discord, right? Whenever I post them, like you could see over here for this Nvidia trade, people always ask me like, "Oh, do you use an indicator to draw your zones, draw your levels?" And my answer is always going to be no. One, I don't like indicators. The only other indicator other else than volume and volume profile that I use is the RSI, and the RSI I use sometimes itself. But the reason why I personally think it's never a good idea to use an indicator to draw out zones and levels is because when you make these levels yourself, you can put a meaning to each one, right? And what I mean is, whenever you use an indicator to draw a level, or for it to automatically draw you a level, you basically sometimes it draws at like the last minute, or you don't even know it's up there and the price reaches up there and you're like, oh wait, there's a level here. But when you draw your own levels, you can make your own plan and imply meaning to each level. What I mean is, let's take this level over here at 196.12 for example, right? Before the market opens, or even while the market is open, let's say I see this level over here and this level down here. I look at these two levels on the 15 minute, and let's just say we're back over here on Tuesday, January 30th. I'm like, okay, if Tesla reaches this level up here that I had in 196.12, since I know this is a strong level, since in the past it bounced off of this, I could look to short or get into puts at this level. And now that you put a meaning behind that level, you have a better plan. And when it comes to trading, you always want to have a plan instead of just randomly entering at a level that an indicator drew, right? So that's what I personally do. It's worked for me. To each their own. If you want to use an indicator, absolutely, go ahead. If it's working for you, go ahead. But I'm just talking about my personal experience. That's why I don't like a lot of indicators and algos, is because you start relying on that too much without having a proper plan. And then before you know it, you're going to start losing trades and you're not going to know why you lost trades. And that's something very important. So in my opinion, it's fine to lose trades, but it's better to lose trades that you know why it went wrong, right? If you get into trades based on indicators and algos and then you end up getting out red, how can you really look back on that and be like, oh wait, what did I do wrong? I mean, the only thing you could tell yourself is I listened to an algo or I listened to an indicator, right? But if you look at price, if you draw your own levels, if you draw your own zones, you have your own plan, you could see what exactly you did wrong. Was it your execution? Was it the time of execution? The price of execution? Was the plan itself faulty? Were you too stubborn with your bias? So that's why it's very important, in my opinion, to draw your own levels and you draw your own zones, because then you have a plan and you know what each level is meant, right? And you can make better plans for that. I'm not saying you need to go on a daily and memorize all these levels. No, you just see where the price is near. Like obviously, I'm not going to figure out meanings for like 240 and 232 because price is not even up there, right? Or down here at 149 or 153. I'm not going to look at those, but I'm going to look at the levels that are close to it, and I'm going to realize what can I do when it reaches that level, right? If price action is getting weak, for example, up at this 196 level, I could look to get into shorts or puts, right? So that's in my opinion, very important to look at. So yeah, you could continue to plot on smaller time frames. Nothing wrong with that. Just know what you're getting into, what you're planning to trade, and how you're planning to trade. Now the next question is how to trade it, and when it comes to levels, it's usually better to trade rejections or bounces off of levels, and it's not as simple as that, right? You need to take into account what kind of day it is, right? If it's a trend day or a range day, that is stuff you need to figure out on your own based on your own, your own confirmations or whatever, whether it be price action like I do, or whether it's an indicator like the MAs or the EMAs and whatever. But usually the better thing is to look at levels as a place to enter into the opposite trade, in my experience. The reason for that is I see a lot of people, they they like to look at levels like, oh, if it breaks above this level, I'm going to enter here and get into calls to test the upside. Yes, of course, that will work sometimes, but the thing that happens is the price is pushed up here usually. Let's take this 196.12 level for instance. Price is pushed up above this level because the banks, hedge funds, they probably have this level out there, right? Keep in mind, there's a million levels on each chart. It's not your job to find each one. It's just to find the levels that you find important, right? So you got to make sure that you're finding the levels that you want to look at, and you just don't clutter your screen with unimportant levels. So yeah, so the banks and hedge funds will push the price above this level, and this is when a lot of people like to go long or get into calls because like, oh, it broke above this level, so it's gonna be bullish. But then it'll bring the price down. It hits people's stop losses, and then that's when the price comes back down. So basically, what I'm trying to get at is it's very important to know what type of data is and then use your levels according to that, right? If, for example, let's say you had a level over here and price broke above it and you see a retracement back to that level, maybe if this is a trend day and you assess this as a trend day, this level right here would not be a bad entry to get into calls, right? Because if you want to use the term support and resistance, that's absolutely fine. But if you want to do that, if price breaks above a resistance, then that resistance turns into support, correct? Obviously, I'm not talking about just break above a price. I'm talking about break and close above a price. So if it breaks above, comes and tests that level, you can maybe look to enter calls to continue to the upside. Versus if versus if the price came down, broke below it, came tested over here, you could look to maybe get into puts to ride the continuation to the downside. So that's why I was saying in the beginning, it's very important to look at what kind of day it is to know what you're going to be looking at when you see levels. You can't just, nothing is that simple for you to just be like, oh, there's a level, I'm going to go trade the reversal on it. No, it's not always going to work. As you could clearly see, I bet you could look back in your past, there's been a level and you've been thinking, oh, if it breaks above here, I'm going to enter, or if it hits here, I'm going to enter into reversal, and it's not worked for you. It's because you're not looking at the bigger overall picture, looking at what the bias is or what kind of date is, whether it's a range or trend day, and then that kills you, right? But that's why, like, I asked here on Tailored Trades, I asked multiple questions. I asked if you guys want to learn how to trade levels, how to trade trend lines, or the different types of stop losses. And majority of you guys asked for how to trade levels. And I'm not surprised, is because levels are things that I have personally made a lot of money off of, right? In my personal experience, and it's because I know how to trade it right versus, other things, because levels is something almost every trader can have on their chart. It doesn't matter what trading strategy you use, right? Whether you use price action, whether you use MAs, SMAs, EMAs, RSI, MACD, all the shenanigans, all the algos, right? So, yeah, I mean, levels is just something that's almost on everybody's charts. It's most likely on the freaking big players' charts, which are the banks and the hedge funds. So it's very important to learn how to trade levels, how to plot them. And one thing I want to make clear before I end this video is one way that helped me learn how to trade was making personal observations and not just, just doing whatever, just going with the flow. No, so what I'm trying to say is, if I trade a level wrong, I want to see why I traded it. So at the end of the day, or after I exit the trade, I'll look at it and be like, okay, what exactly did I do wrong? Right? So what I'm trying to say is it's very important to make your own observations instead of always asking questions. I am okay with answering questions. That's fine. Obviously, I get many messages, I get many questions, so I'm not going to be able to answer all of them in appropriate timing, or, or even get to all the messages. But you shouldn't just be waiting for someone like me or another person you might look at on Twitter or Discord for them to answer your questions. You should be looking at the chart and realizing and figuring out why exactly things work the way they do, because that way you can understand trading in your own way and give yourself a better edge, or whatever you want to call it, to help you out. My edge comes from price action, volume analysis, trend lines, and levels, right? I can easily plot out levels. I can easily identify levels. I can easily find trend lines, assess what they mean, see what exactly I want to do with trend lines, right? So That's what I did, and the reason I got good at them is because I observed. So it's key to observe what you did wrong, what you did right, trades you didn't get into, and how price reacts. But yeah, next thing I forgot I was gonna do Nvidia levels, so just go over that really quickly. Again, we start off at the weekly, right? You can see Nvidia's been on a tear, so can't really do that many levels on the weekly. You just have this level over here, 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 and here. Yeah. Okay, so then we go to the daily. You can see we had a bounce over here, so we're gonna put that. We had a rejection over here. There's not that many levels right over here, so we're not gonna plot anything there. But okay, you guys basically get the gist of it. You can also do the closes, of course, of the recent day, because that's obviously still a level. So yeah, I mean, this is how I personally trade levels and how I plot them. Hopefully this helps. If you guys have any questions, feel free to either message me or reply to this. I'm going to be posting this in my Discord first, and then later on I'm going to post it on Twitter. So if you guys are on Discord, just feel free to message me on our server in the premium chat. If you guys are on Twitter, feel free to just reply in the comments below. All right, thank you guys. Have a nice day. Good luck. Hope this helps.